Imagine a world without banks, accountants, and insurance companies.
Does your insurer help you?
Where you can buy a house without real estate agents.
Where do we go from here?
And borrow money without having to go through financial institutions. That's the vision behind DeFi, or decentralized finance. Blockchain technology was first created to buy, sell, and mine Bitcoin. Since then, other cryptocurrency platforms have taken it further, like Ethereum, which allows decentralized financial services on its network. But first, here's how blockchain works. Blockchain stores all the transactions ever made in blocks. That means information in a particular block can't be rewritten. It must be stored in a new block and added to the chain. When a transaction is made, thousands of computers race against each other to solve a complex maths puzzle to verify it. Once it's verified, the information is shared across the network and a new block is added to the chain. By decentralizing that information, it's harder to tamper with. That's supposedly why you can trust it.
With decentralized finance, we're seeing really a parallel banking system rise up together with the existing banking system, and it remains to be seen how big it becomes.
What's special about Ethereum is that users can build dApps, or decentralized apps, on its blockchain, like software that runs on a computer. These dApps are powered by smart contracts, which cut out middlemen like bankers and lawyers who are there to manually verify that both sides have fulfilled their end of the bargain. Instead, the terms are in code, which have been programmed to, for example, transfer money into someone's account automatically when certain conditions are met.
The cryptocurrency world is heavily manipulated. There's no doubt that there's a lot of manipulation going on, and it's effectively operating in unregulated space.
DeFi is a fast-growing market worth about $50 billion. You can exchange cryptocurrencies on platforms like Uniswap for stable coins like DAI or Tether, which are supposedly pegged to the US dollar to reduce volatility. And there's platforms like Aave, which allows you to anonymously lend or borrow crypto.
If you're investing with a cryptocurrency because you want to make a quick buck, well then you're just as likely to lose that buck quickly. Nobody ever went to the trouble of setting up a cryptocurrency as a philanthropic project in its entirety.
Also on Ethereum's blockchain are NFTs, or non-fungible tokens, which are shaking up the world of art and collectibles. Even the source code for the World Wide Web has been turned into an NFT, a digital certificate of ownership that can't be forged or tampered with. The world of mainstream finance also wants in on the action. The Reserve Bank is testing the idea of a digital Australian dollar, while countries like the US and China are also looking into something similar. Blockchain is also being used in the meat export business. Warwick Powell's company tracks cows from Australian farms to other countries to verify the quality of the meat.
People can independently interrogate the claims that are being made by suppliers about where something's from, what it is, when it was done, who it was done by.
The ASX hopes to launch a blockchain clearing system in 2023 to make buying and selling shares more efficient. But it's still early days for crypto, blockchain and NFTs, so be mindful of the risks.
And for further analysis, I was joined earlier by entrepreneur, investor and corporate advisor Mark Carnegie and Professor Ellie Rennie from RMIT University's Blockchain Innovation Hub. I began by asking Mark how big a challenge DeFi will be to the traditional banking model.
Well, I think it's going to be a huge threat over time. What I've said, and I'm on the record as saying, is I can't tell whether the whole of the crypto bubble comes and goes and everyone loses all their money, and what happens is the incumbents modify their existing systems and procedures enough to make that happen, in which case still the world's a better place, but the crypto investors have got wiped out. Or, in fact, some of the models like Ether have got enough momentum about them to genuinely become a big part of the world financial system.
So what do you see as the benefits of decentralising the banking system, Mark?
I think it's just going to take frictional costs down, and it's going to allow a whole series of things that happen at the moment where people charge you tolls to do things that you otherwise shouldn't have tolls doing. It's going to eliminate all of those.
Ellie, you're working at the RMIT Blockchain Innovation Hub. Do you think it's possible to safely decentralise the banking system using this underlying technology of blockchain?
I think it is, and I think it's already happening. It depends what you mean by safely and for whom. One thing to keep in mind with these protocols is that they're open source, so it's quite transparent. You can see the code. But as a result of that, you also get others coming in and copying that code who might not necessarily have the same responsibilities in how they're doing it.
Mark, I know that you recently set up a new digital asset fund which holds some Bitcoin more as a momentum trade. What sort of interest are you seeing? What sort of investors are coming into that?
The core of what we're doing is finding wholesale investors who want to find a mainstream fund manager who's willing to go into this space. And our product promise has been that if you put a material amount of what are called stable coins into a portfolio at the moment and stake those stable coins, you end up being able to create what the financial people call alpha, that is undiversified returns. And people are finding that an appealing thing to look at. There are a whole series of young people who are crypto natives who know exactly how to play these things, have got their own interest in what they're doing, and part of it's investing and part of it's like a day at the races.
So Ellie, what further innovations might we see in this space?
What we might see, I think, coming out of this increasingly is integration, not so much with banks necessarily, but maybe neobanks that are giving people the capacity to earn greater interest through these protocols, through what are essentially automated processes going on in the background.
But Ellie, just on safety, what happens on the Ethereum blockchain if your money goes missing?
Interestingly, there is a native insurance industry emerging. Companies like Nexus Mutual, which can give you some kind of coverage when you're using certain protocols. So in that respect, we're beginning to see these ancillary services that I think are quite necessary for a healthy financial system emerging. But yes, there is still a huge amount of risk. But at the same time, what I think I really want to reinforce here is that these protocols are not necessarily owned and managed in the typical way that we think of financial services. There's huge communities of users and they have power over what happens with these systems.
Also, Catherine,
yes.
I think people have got a very short memory if they think financial systems are safe. Look at the GFC. In the end, the government had to step in to guarantee the world financial system. It's safe because they decided to print money. It's not safe because it's safe. The fraud that happens all the time is safe because you're essentially charged huge amounts of insurance embedded in all the fees you pay all the time.
But Mark, what would you say to someone like Nassim Taleb, who was, again, printed in the papers today, saying Bitcoin's a failed notion of a currency without government, it's not a store of value, it's unreliable inflation hedge?
I think he's right on Bitcoin. I have a huge fight with the rest of the crypto community. I think defending Bitcoin as opposed to defending the idea of decentralized systems is actually wrong. And that is why I'm more an Ether maximalist than I am a Bitcoin person. But those are details for people who understand the system as opposed to the people who are just trying to look at it at the moment. What I'm trying to say is being digital native, understanding what is going on in this space is immensely important. And, you know, Nassim understands the arguments and the frailties of Bitcoin, but I think he's done an incredibly poor job of continuing to understand the rest of the decentralized finance. I can show you examples at the moment where somebody can more easily turn Bitcoin in Australia into local currency in Burma in the face of a government crackdown than they can use any traditional system at the moment.
Just before we go, we haven't touched on NFTs, Ellie. They're often traded using cryptos and they're supported or verified via blockchain. How much growth do you see in this area? We've seen a lot of it in the art world, but it's going further than that now, isn't it?
I do expect more growth in the creative industries. Beyond what we're seeing in digital art, I think anything that actually creates a digital twin that ties a thing to a contract that shows ownership is going to benefit from NFTs over the long run. And finally, I think the area to really keep an eye on is what we call the circular economy, which is being able to track the whole life cycle, not just the production of goods, but the consumption and waste, which could be important for climate change in the long run too.
And just finally, Mark, what about beyond DeFi? Have you thought about, decentralising other areas of, say, commerce?
Yeah, I mean, just remember the crypto maximalists think they're going to create a country. They think this is the end of the Treaty of Westphalia. So the size of what can be imagined here is absolutely enormous. And just to jump back to Ellie, who I think's done a very good job of explaining the details, I agree with her about NFTs, but I'd go even further there, where I think that your ability to reimagine intellectual property in a crypto world and then morph it or graft it back onto the real world, nobody's really spent the time thinking through how that's going to play. And there is a huge amount of running room in that area.
The options seem unlimited right now. Mark Carnegie and Ellie Rennie, I'd like to thank you both for joining us on The Business.
Thank you very much.
Thanks, Catherine.